Hey trader, here's the question for you. Are you ready for the coming market crash? This week was really crazy and it looks like we're on the verge of a bull trap. A lot of traders out there are basically afraid, they don't know what to do, but don't worry, we've got you covered in this week's session of Trade Your Way to Freedom. I'm Dennis Wilburn, the AutoPilot Trader, and in this week's session, I'm going to be covering 7 tips on how you can survive and profit even if the market does crash. And I'm covering 2 top growth stocks that with high probability of profits regardless of which way or how hard this market falls. So if you're looking to stay ahead of the game and make smart trades in a volatile market, this video is for you. We're going to help you learn how to take advantage of profitable opportunities so that you can be more consistently successful with your swing trading. So, hey, let's make sure you watch this video all the way to the end because that's where the best offers are and that's where the best tips are. So with no further ado, hey, thanks for tuning in to Trade Your Way to Freedom. Let's jump into today's session right now. Hey, good afternoon, everybody. We are taking a look at this market today, and I describe this market in 2 different ways. One, head fakes and very little traction. We're being impacted by reports of inflation. Hang with us today as we get into today's section. I've got 7. I'm going to highlight 7 ways to survive in a market crash and profit from those. I want to welcome Anil. Anil, welcome.
Good to be here. Thank you.
Glad you're here also. I know we've got some great stocks to be taking a look at. And one of the questions, that we provide stocks that we're taking a look at for a couple of different reasons. One, so everybody can take advantage of our expertise in picking stocks and that type of thing. And also it gives the ability to look over our shoulder to say, hey, what's Dennis and Anil looking at? Because, speaking for Anil, he is a darn good stock picker. Isn't that right, Anil?
Always trying to improve, though.
No, that's right. So anyway, hey, I want to welcome everybody. Let's go ahead and jump into today's session. Well, let's get after it. So as I said, we're going to start covering the intro, secrets, consistent, profitable trader. We're always doing that. Trade tips, index review, and then our stock picks for the day. I don't know about you, but I was having a challenging time finding some stocks that we're setting up. There are several strong stocks out there, but this market is looking really kind of wobbly. And I'll explain what I mean by that as we get deeper into it. If you are joining us over on the YouTube channel, just identify yourself and say hey and hi and all that kind of stuff. Give us a thumbs up. Let us know that you are there. The live stream is, in fact, going, and you can just drop any questions you have there. And if you're joining us live on the Zoom and you have a question, just drop it down into the chat box. And if you have any questions, just drop them in over there. I'll be monitoring that. I love this quote by John D. Rockefeller: the best time to buy stocks is when the blood is running in the streets. Now, the blood's not quite running in the streets yet, but it could be something that's going on. There's a lot of predictors out there that are saying is that 2023 into 2024, we could go into a fairly severe recession. We'll see if that is in fact what takes place. The first way to both survive and profit in a market crash is, one, stay in cash. We're going to make this really simple. Stay in cash, stay out of the market, keep your finger away from your mouse so that you're not being impulsive or compulsive about placing orders. That's one of the best things to do, especially if you have no experience in trading a down market. That's one of the things to do. 1, be disciplined. Discipline means having written rules and following those written rules to the T, because it'll keep you out of trouble. Most of the time, people lose money in a market crash is because, 1, they do not have rules. They do not, and then which falls us into our next item is manage your position size. If the market is going down and falling, you know, you can look for taking bullish trades, but with the caveat, take smaller position sizes. There's no reason in taking on the same level of risk that you would when the market is bullish. And then next, set stop loss orders. For me personally, learning how to use stop losses and do them properly, and not just say, yeah, I'll do it in my mind or I'll put an alert on, but putting conditional stop loss orders, real orders in so that it protects me is one of the biggest way that I have saved losing a lot of money. And so you can tell yourself, I'm going to use alerts, and I'll just, you know, put that stop number in my head. You will not, when it comes to then executing it, you will not typically do that. The probabilities of you following your soft stop are really, really low. So that's the first four. We'll get into the next three towards the end, plus the very last one I think you're going to like, because that's the one that's going to tell how to profit from the from a sell-off or a market crash. I'll put the disclaimer up there for a second. So let's go ahead and jump over into the what's going on the 17th of February. Here's what we did with the AutoPilot Trading Service since 2012 when we first initiated. As you can see by those green lines, we have beat the heck out of the S&P, and we continue to do so, run at about 37% per year. And excuse me, I love this autopilot trading system because one, I don't have to be paying attention to it all the time. It's kind of a fire and forget. And I set it up specifically like that because those are the things I was challenged with when I was working full time as an engineer. So I put it together so that one, it will benefit everybody who's still working, you know, full-time or working part-time, or just doesn't want to be in the market watching the screen all the time. That's how I designed the system. And, you know, so that you, one, can profit from the market, but at the same time, not spend all your time with your head in the computer screen, watching the ticks, tick by tick. Here's where we were last week. We were up about 4.91%, and this includes both realized and paper gains. Now we're up 6%. Had a really good week this week with going against the flow with some oil stuff. And then also check this out. NASDAQ still up very nicely, 12%. And the Russell up almost 10%. The S&P is, you know, behind the curve, and also the Dow just floating along. Pay attention over here, though, because the NASDAQ and the Russell are still in bear market territory. Let's jump in and take a look at I'm going to do the market analysis, but before we do that, let's go and take a look at the stock that Anil has for this week. And Anil, your pick this week was SM. And the fundamental analysis on this through Investor Business Daily, this is a very, very strong stock. Now, tell us about it, Anil, and where are you going to actually enter this? Because it looks like it's getting a little bit top heavy right now.
Yeah, and it's right now it's kind of backing up today, and looks like it's finding support right near the 8-day line.
Okay.
And I would want it to reverse it. If I'm looking at the market Smith chart, it just broke out yesterday.
Okay, up here.
Right now there's a dip.
Okay.
Fundamentally, it's very strong. Composite rating 99 and high accumulation distribution, and also up-down volume ratio. And if I look at my triple screen chart, the signals are active on daily, weekly, monthly, everything.
Okay. So yeah, I see this, and I say, you know, I like to, as I like to say, I like to look to my left. I'm seeing that in the past, when this is in an uptrend or when it's, you know, progressing up, is you get like 3-4 days worth of a pullback and then it would bounce. I would, you know, if I was to be trading this, I'd be looking for something similar to that, but it's got really good ratings. What was the accumulation, not the accumulation, yeah, the accumulation distribution on it? Was it an A or A plus?
I think it is, it's a B.
A B, okay. So people are buying it. And then its up-down ratio was what?
Up-down ratio was also pretty high, and that's 1.8.
1.8. And so for those of you who may or may not understand what the up-down ratio is, what it does is it tells us that, and it's on a measurement from Investor Business Daily, and if it's over 1, it means that that particular stock is being actively acquired. So if it's over 1, and that's a good thing to be keeping your eye on. So, okay, cool. On this one, it does have, for you option traders out there, it does have, no, not weekly, but monthly options, and it's got some pretty good open interest on the monthlies. And so my pick, okay, let's go ahead and I'm going to go ahead and do the analysis, and then we'll finish up with my pick. So let's take a look at the spiders first. Okay, spiders. As you can see with the spiders, what transpired this week is, 1, price action came up on Monday, Tuesday, hit this past high, you know, or this, it was the 50% retracement on this Fibonacci from the high here to the low here, and then stalled out, and then basically started selling off. We have broken the uptrend line here. The momentum has shifted now to the downside. We'll see if it holds up at the 0 line here on the TSI. The market forecast is also shifting to the downside. And what I think is kind of very telling about the S&P is, and the spiders in this case, is see these topping tails? This is where sellers came in. And this week, sellers came in at a lower level than last week and are selling off. And it looks as if when we have taken out the low from last week. Now, other things that are telling me that, you know, I'm not going to go overly bearish on this, but the thing that this tells me is that we closed below the 8 yesterday, closing below the 20 potentially today. Haven't closed yet today though, and then so if we do close below the 20, I would look for a retrace all the way back down here to the 50-day moving average approximately, which just happens to be at the bottom of the magic fib box. And so that's what I'm looking at. And that could take us several days to transpire to get down here. And that's where I'd be looking for a bounce. If the 8 and the 20-day moving average do in fact cross, like it did over here, then we may be in for a little bit deeper correction. So I'll be keeping my eye on that swing low there at 399, this swing low here. If that one fails, look for a retrace back to 387. NASDAQ, similar type situation. NASDAQ closed below the 8 yesterday, broke the uptrend line, approaching its breakout level. We are slightly above the 20-day moving average. I would put a alert right there below, just slightly below the 20-day moving average. If it closed below that, watch it just start clicking down and hitting off of each one of these. You know, it could do the stair step thing, and the stair step thing, it looks like this. I'll give you an idea of what it looks like. It basically is stair step down to the next level of support, come back up a little bit, and then come back, retest it. If it breaks, then we'll go down to the next level of support, which is over here. Rebound, then fall again, retest, fall all the way, potentially fall all the way back down to this low over here. And again, if we continue to see evidence of strong inflation, watch for the markets to, kind of do their sell-off thing and continue. I think that there is the path of least resistance. If we close below the 20-day moving average, I'm sensing the path of least resistance is down. Now, if that is the case, that will impact almost all the stocks also, because 60 to 75% of all the entities and stocks that are out there will follow the similar path to the indexes themselves. And let me go one last thing, because I think one of the bright spots in this whole thing is the Russell. Look at Russell. The Russell is just fighting it. They are fighting it. There is a huge battle going on between the bulls and the bears, the buyers and the sellers, with the Russell and IWM, and you can see staying below the downtrend line there, and we are right now ping-ponging between the 20 and the 8-day moving average. What's it going to do? We had a reversal yesterday, pretty good sell-off, but today we stopped dead in the water before we got to the 20-day moving average. That's, I think, a positive for it. The thing about it is it doesn't give me enough to provide a 3-step setup and a trigger. So, Anil, that's what I was talking about. Head fakes and no traction is what I've seen in the market. For the S&P and the NASDAQ, I think the path of least resistance is a little bit further down, and the Russell may just hang out. So, what you got any comments on what's going on with the market indexes?
Yes, sure. Overall, I'm following my triple screen system. On the weekly charts, everything so far looks okay.
Okay.
However, when I switch down to the daily chart, MACD has broken down in all 4 of them, in
yes.
S&P, Dow, NASDAQ, and Russell.
Yes. And
I don't like that. That has not happened in a long time, when all 4 are breaking down. So we'll see.
I keep this chart system up also, that is a monthly, a weekly, and a daily. And I show that MACD crossed here several weeks ago, or several days ago. And on the histogram on the MACD on the weekly chart, it actually, if you're following the histogram, it actually turned to the dark green, which means it's rolling over.
Yeah.
2 weeks ago also. We're still working off on all of these a bearish reversal signal from last week, and it did exactly what it was supposed to do, which was price action came right up into almost to the midsection of that, and that is rolling over and selling off. We'll see what happens towards the end of the day. If we get a push harder to the downside and Russell gets closer or actually breaks the 20, that could foretell some pretty ugly stuff going on next week. So thanks. That's good. So, and I see Phil made a comment about Gush took a dive. Yeah, it sure did. That's one of the reasons why we kept our stops on Gush so tight, Phil, because it had the potential of being. It had such nice looking chops to start off with. My stock, oh gosh, for this week, I'm going to basically stick with the same one I had last week. And that's Mobileye. Mobileye, it came pushed above the, pushed above and broke out right here, above the upper level of this Fibonacci. Now we're doing a nice little pullback. And here's what I'm looking. I'm looking at this to pull back into either the 20, there's support there, or we may pull back all the way to about $40. So, somewhere between $39.50 and $40 is where I'd be interested in taking a peek at this on mobile eye. Weekly, if we close right where we are, this would be a shooting star, which is being not indicative, but that would constitute a bearish reversal signal on the weekly chart, which those sometimes can be very powerful. And with the extension and where the TSI is on the weekly chart, it is well overbought. So it wouldn't be surprised to see this pull all the way back down into where it started to break out. And but anyway, that's the one I'm looking at, Anil.
Yeah, Mobileye, we had it on our Delaware focus list, but I missed it.
Okay.
Buying it. Now I'm waiting for the entry, and maybe what you're saying is looking good if it pulls back enough. But
yeah, I'm going to remove that really quick. The other thing you'd be taking a look at, folks, is just this uptrend line here. Now, what it could do is when that uptrend line corresponds with the 20-day moving average, which could be maybe over here, that would be a place where that would be a reasonable place to look for an entry. Check out right here that we have it already has earnings behind it. So yeah, I like it, Anil. It's got, it does have, let's see, let me take a look here. Yeah, it's got really good monthly options available. So, okay, as we start to roll in towards the closing things out here. Okay, let's go through the last three of the top 7 ways to survive and profit in a market crash is 1, use technical analysis. In other words, that's very simple. Trade the chart that's in front of you, and it will help you. It will keep you out of trouble. If you do not trade to the upside and the price action is below the 50-day moving average and below the 200-day moving average, and the 50-day is below the 200-day moving average, that is not a particular stock you want to be taking a long position in. 1, and then number 6, have a long-term setup, have a long-term mindset, knowing that typically crashes and even bear markets don't last forever. Keep that in mind, and Tesla's a very good example. Tesla, since it bottomed towards the end of last year, has already run up 100%. So be aware of that. And last but not least, and here's your moneymaker. Number 7, use bearish leveraged ETFs. In other words, the inverse ETFs as part of your strategy if you have to be trading. And basically apply the same rules. If I'm doing a leverage, the only thing I change on my rules, because I'm trading the leverage to go up as the index is coming down, I highlight primarily just the indexes. I like SQQQ and TZA, but I apply my same rules, and I only trade up to a half position. Again, I'm protecting myself because the leverage inverse ETFs have a tendency to be quite volatile and can get ripped, to the downside really quick once the indexes start to rally. So what do you think of those 7 rules, Anil?
They look good. I'm
okay.
Happy of that.
Yeah, I'm trying to provide just a little bit of, additional items for everybody so that they can, be aware of what is going on. And again, as I said, if you join us over on the YouTube channel, welcome aboard. If you have any questions, leave a note there. And so, hey, do you struggle from any of these? And I've listed these out before. And this is another reason why I basically formulated the AutoPilot Trading Service. I used to struggle with these until I developed the AutoPilot Trading, and also Active Trend Trader originally was the system that AutoPilot Trading is based off of. And if you want to find out more, check out this link. I will put it in the link in the description. And for right now, I'm offering 15% discount because we've got some big plans going on and that are going to be happening through the end of February and into March that you're not going to want to miss out on. And so and that's one of the things that we do for my members is, one, this sale ends Tuesday, February 21st, and it will be gone. It will never be, put back in. And one of the things that I've done for the past, since I first started offering active trend trading subscriptions, is when you come in, as long as you maintain your membership, I never raise the rates on that membership. That's one of the things that I made a pledge I would never do, because I'm not going to try to go back and readjust things. And even though we've made huge improvements every year, I basically I do not want to be that guy who does that, who just changes things. So I fix the rates at whatever number you came in at, and it stays that way as long as you are an active member. So, Anil, that's all I've got for today. And thank you very much for joining us. We'll see what next week brings.
Hey, thank you very much.
And I will basically talk to you after the market closes so we can chat through a couple of things. So aloha, trade well, and prosper. And mahalo, as we say here in Hawaii. It is Friday, so we're looking for a good Pauhana Friday. God bless everybody, and we'll see you next week. Oh yeah, and don't forget, everybody, it's a long weekend. So